Hi, hello everyone. I am Edward, the stock manager, and I'd like to welcome each and every one of you to the discussion group Indian Stock Analysis. Investment Funds, a group about planning the Indian stock market and achieving wealth freedom. Follow me and you will be invincible in the stock market. I am Edward. Alright, so today I want to talk to you about how to judge the trend through trading volume and price. When analyzing stocks, the first thing we need to do is to determine the overall trend, and then we can look for specific entry points. For me, the key to grasping the trend lines in the correlation between trading volume and price movements, for example, high volume at a high price, high volume at a low price, low volume at a high price, or low volume at a low price, and so on. So these combinations of volume and price patterns are what I value most in assessing trends. When it comes to trading volume, I will pay close attention to its different patterns to help everyone to understand the intentions of the main players. You see, candlestick charts alone don't always reveal the true intentions of the main players because they control the highest, lowest opening and closing prices. So, can candlestick charts really analyze the main player's intentions? However, trading volume is real and it cannot be faked. We can somewhat understand the main player's intentions by observing changes in trading volume and to determine if a stock will rise or fall by the amount of money that is being traded. Simply put, in the stock market, more buyers mean stocks go up. Trading volume is the clearest indicator of whether there are more buyers or sellers. It is very straightforward and very practical. So firstly, if you look in an uptrend with a relatively low volume, there is a gradual increase in trading volume as prices slowly rise. So candlestick patterns start to show an upward trend, which is indicating a generally bullish outlook. So on days when prices rise during an uptrend, the trading volume is typically higher than on days when prices fall. So when we see a significant increase in volume at high prices without corresponding price increase, it's a signal to sell. For example, Hathway. Next, if there is a continuous downtrend with very low trading volume and then a huge volume appears at a low point and the price to stop falling, it could indicate that the major players are buying in large quantities. So once the decline stops and stabilizes, then it can be seen as a sign of a reversal in the trend. For example, RT drugs. So when stock prices go up, trading volume also tends to increase. So we compare the volume of rising and falling days as well as the number of bullish and bearish candlesticks and the size of the volume. So if the volume is high on a rising day and if it is low on a falling day, there is high probability of further upward movement. Conversely, if the volume is low on a rising day and it is high on a falling day, then there is a high probability of a downward trend. So for example, you can take ITC and HCL Tech. The trading volume increases during the rise and shrinks during the fall, but the price does not fall below the starting point on the day of the rise, so you can buy. The rising trading volume is relatively small and the falling trading volume increases, but the price rising, you can't go and buy. So there is a high probability that the main force wants to deceive ordinary investors into buying the stock so that they can sell it easily, and it will easily fall sharply in the future. For example, you can take SAIL and as well as Paytm. So during a downtrend, if the trading volume increases while the volume decreases during uptrends, it will suggest that the main players are actually selling stocks. There is a higher probability that the price will continue to drop significantly in the future. This you can use Paytm as an example. When prices rise at high levels, but the trading volume decreasing day by day, so this indicates that the main players are selling stocks. All right. So there is a high probability that prices will fall in the future. For example, escorts. I hope, ladies and gentlemen, the stock market techniques I've shared can help everyone. Friends can look for relevant stocks and discuss them together. But that is all for today. All right, tomorrow evening, I'll continue sharing my experiences and techniques with everyone in the group. So I will see you tomorrow. I am Professor Edward. I am a leader who focuses on the stock market. Thank you so much for listening today. Thank you.